So for raising capital, so when we talk about capital, we all know that it is the lifeblood of a growing business. So it is required at every step of a business, and funds are the necessary capital to get a business or idea off the ground, and funding alone cannot make up for a lack of experience. So, or a management or a product with no viable market. So for capital, um, we say capital, these are the funds and other financial assets needed for operating a business. So this includes cash and other financial assets in deposit accounts held by an individual or business. Tangible machinery like production equipment, machinery, um, storage buildings, and it is the total of all financial resources used to leverage growth and build financial stability. So, security funding is one of the first steps and a very real requirement for starting a business. So, finding financing is not always easy and often results in a frustrating experience, especially if you want to pursue business. So proper information, preparation, and planning and realistic expectations would lead to successfully accomplishing the financing needs. So we have actually different types of funding. So the first one is debt funding, marang nangutang ka. And the second one is equity funding. Debt funding, that is the borrowed funds and are repayable on a fixed schedule with interest. Kaya if kumangutang ka and if you pay something, nanay interest ang imong pagbayad, especially with a fixed schedule. And equity funding, that is the ownership through either stock or membership. So let's talk about each of these types of funding. For the debt funding, um, it is less cost than the return required by an equity investor. And it is difficult for people with previous problems or high risk ventures. It usually requires a collateral to ensure repayment of loan and maturity debt, payment amount and schedule and interest may vary, and it is available from banks, non-bank institutions, and friends, and even your relatives. So that is what we call debt funding. Kaya di ba when we need capital, instead of ka lang sa mga bank institution, we also like borrowed money with our friends or relatives. I know someone who always do this, kanang borrow money from their friends and relatives. So we have actually types of debt funding. We have personal loans, often the easiest for a new small business owner to obtain. Operations related financing depends on day-to-day business operations of your business. And business loans, most traditional and widely used among businesses. So when we talk about personal loans, so these are personal bank loan, and this is obtained from a bank and a payback in monthly installments. It loans from life insurance, borrow against the cash surrender value of your life insurance policy. Um, Credit cards, so it is more mostly form of credit, can provide ready access to cash and should only be used if the credit limit is high enough to cover the needs and if you can pay off the card quickly. And lastly, friends and relatives. ensure to treat the transaction in a professional manner, and pay a fair rate of interest, sign a legal promissory note, and repay the money as agreed. For the operations-related financing, we have supplier credit, which these are the suppliers with whom you do business, can be a source of funds if they extend favorable credit terms to you, and it is the availability of the form of credit will vary depending on the industries you and your vendor are in. Um, we have also customer credit. This is by getting your customers to make a deposit or pay in advance for products or services, and you can create a form of credit. Leasing, it is what we call a rental arrangement that gives you the use of an asset, such as a car or a piece of machinery that someone else owns. And lastly is asset-based financing. These are the borrowing money on the assets your business owns, including the inventory and other fixed assets such as plant and equipment. For the business loans, we have term loans. So these are installment loans that are paid back at regular intervals over a specified length of time. We have demand notes. These are single payment loan intended for very specific short-term needs. Lines of credit, similar to credit card, that establishes a credit limit and specific terms for repaying money that is borrowed. And lastly is government assisted loans. So government either directly lends to small business owners or provides a guarantee of repayment for other small business lenders. So the other example of funding is equity funding. So when we talk about equity funding, this can have large effects on bylaws, voting rights, operational control, and future rights. So it requires that you sell a partial interest or ownership in your company. So in return for their money, equity investors ask for a share of your profit. So it allows investors to buy shares of ownership in your business. So advantages lang, Ani, is it provides capital on a permanent basis with no requirement of repayment of principal or interest, and increases the company's net worth, hence improving the financial stability of the company and its ability for other debt financing, and can result in outside expertise being available for management or board of directors responsibilities. Ang disadvantages lang niya sa equity funding is that it carries a higher cost of capital, therefore more expensive, dilutes ownership control of the business, and the profits must be shared. Dili lang ikaw ang naay kanang sa imo lang ang profit, ang sa investors pod nimo. And equity capital is permanent financing and is often difficult to obtain. Potential for conflict between company founder and investors. And controlling interest often becomes a critical issue with the founder and can require more detailed and timely reports. So mo na equity funding very kalang common kalang bitaw kung nakay business or a company, and then nakay mga investors, and then kung malugi ang imuhang company, mo ato imo investor tawagan kag scam, di ba? Kay walay mga wala sila nadawat na profit, especially nalugi lang imong business or koan ang imong company. So mo na um mo na ang disadvantage sa equity funding kay um there is a shared profit with you as a owner and with the investors. So mo nang iyahang advantages and disadvantages. So these are the types of equity investors. We have informal investors, family, friends, colleagues, suppliers, private investors. We have private or limited stock offering. These are raised significant amounts of equity from outside investors without the high cost and regulatory burden of a public offering. We have venture capital firms, most risk-oriented investors due to specific investment preferences. An initial public offering or IPO, uncommon for small business startup, but can be an option for the profitable, well-managed, growing small business. So when we talk about funding, kailangan mangita ta og sources. So these are some of the types of funding sources. So the first one is self-financing. So these are businesses funded by the personal savings of the founders. From the word itself, self-financing. So it allows the entrepreneurs to maintain complete control of the business. Imo ka man ng kwarta, so you have the complete control of your business itself. We have bootstrapping. So it reinvestment of early product sales into a company. So it requires a customer-centric process of development that permits the company to build for early sales. And it allows entrepreneurs to maintain control of a business without having to comply to outside influence, while also preventing the entrepreneurs from risking their own personal savings. Other funding sources, we have federal grants. It provides aid to early stage R&D at small technology companies and faculty startups. So pwede ma-apply sa inyo ha, because actually all of your business idea are R&D or small technology companies in the future, or faculty startups rather. So it offered to qualified small businesses. University incubators may offer technical assistance and counseling to faculty entrepreneurs who are invested in securing grants. Ang sa federal grants, ang nagakuan ani sa TOA kay ang Navigato. Okay? They can actually grant you funding source to start up a R&D or a small kalang to start up a R&D rather, or to pursue a startup. So mao na if you want to, I don't know if you kanang read a post sa Navigato that they open for funding. So mao na pwede ang Navigato ang maka-fund sa inyo ha, para kanang to make it possible ang inyong gibuhat na R&D or inyo buhaton na startup or a business rather. Some other federal grants like DOST funding, CHED funding, and etc. Bank loans. Bank loans, primary option for startups to secure debt financing. And the problem is banks often want to see 2 to 3 years of financials before they consider making a business loan. So that is for the bank loans. We do have business plan competitions. So it provide help in securing some initial funding. So it is the participation in which could provide resources and assist in refining your business plan and pitch. We have also joint ventures. It is strategic alliances with larger companies. So ang um, actually for joint ventures we do have this like advantages and disadvantages, but or the risk. But I will not discuss that further about the joint ventures. For other funding sources, pwede pod angel investors. These are wealthy individuals that meet the definition of an accredited investor. So it is working in association with other angel investors, often in an organized angel group. We have venture capital, professional institutional managers of risk capital used to fund ideas that could not be financed with traditional bank financing. So for um, speaking of funding sources, we do have this securing funds. So for securing funds, the first one is business plan. When you secure funds, for business plan, it should demonstrate a clear vision and strategic outlook. So the pitch and executive summary are the most important tools you have to gain the initial interest of an investor. So it focus its focus should be on the focus on problem and the solution that the startup will provide, job that a potential customer needs to accomplish, and how your company's offering will do that job better, more efficiently, and or cheaper than existing alternatives, and practical benefits of the offering and not the technical features. Business team, it should demonstrate knowledge, ability, and drive to succeed. So remember to sell yourself, and the management team needs to have a clear understanding of the market opportunity and of the competitive environment. Investor. So this lending experience to the business, or it lends experience to the business. Mentoring and partnering with the management team, and supporting in future rounds of funding through a strong network of contacts. So for investor, the ideal investor will offer a startup more than just funding. And when approaching investors, be mindful that they are concerned with the return on their investment above all else. And all investors want 5 key questions answered. The first one is how much it will cost me, what do I get, how will you spend my money, and what is my expected return, and when will I get my return. So those are some of the examples na i-question sa inyohan ng mga investors. So when looking for, speaking of the investors, when looking for investors, we need to plan to contact a lot of investors. Okay, when we talk about investors, when you're looking investors, Manggod, it is more on the connections and partnerships. That is what I'm thinking lately, kanina. So anyway, when you want to look for investors, you contact at least 100 investors. Imagine 100. And it is for serious conversation will only be with around 5. Okay, sometimes ang uban walay dili walay kanang dili walay inganyo bitaw walay kanang dili sila kuan um dili nila gusto mag-invest basin na sila gusto kuan invest something for their money, and list must be targeted and ensure that they invest in your sector. um Second is building relationships starting yesterday, because relationship building is crucial. So you need to start early. So kailangan you need to start building relationship with others, especially with your investors. So for venture funding, fundraiser for at least the next 5 years of your life will be needed. And for natural introvert, keep investors engaged by adding them to a newsletter of quarterly updates. Mao na, kung introvert ka, di jud pwede na ka ng paulaw-ulaw lang ka. Kay you need to actually like do updates or kanang um, build relationships with your investors. And make sure to remind investors your company exists, and make sure to keep relationship going even when you aren't looking to raise money quite yet. The third one is the venture company is small and therefore don't burn bridges. So venture company community rather is shockingly small, and don't burn bridges means that you never know when a past relationship will come back to haunt you. Fourth one is build passion into your pitch every day. Hardest job is keeping the passion alive, but it is your responsibility to bring that passion every time you pitch. So not only for investor meetings, but for when you pitch candidates and employees. Fifth is follow up 3 times. Advice, um, follow up quickly and consistently over a 2 to 3 week period. Six is decide between metrics focus or big vision. So just to remember that goal is to convince investors that your business is one worth investing in and will make your investors money. Metrics do not need to sell the dream, because real metrics say the business is working. And the vision is it is the future thinking or plan of business. Pre-qualify your investor, maximizes everyone's time, establish the investor's investment criteria, research if an investor can provide the minimum capital you are looking for, and if they invest in your sector. Eighth is don't run your business like raising money is the main objective. It means that do not say that you need this particular story when raising capital. Kaya usually manggod kung naka-investor, ang imohang usually isulti kay kanang you want to raise money. Dili ka na ang imohang um, mission or vision of your business just to raise money. Ninth is practice your pitches. So junk investors are not bad investors, but are the investors you are okay not getting your pitch perfect with or not winning. So practice your pitch with junk investors until your pitch feels organic. And lastly is draft a pitch deck right after racing around. So run your business like your story is your main objective. Referring back to the pitch deck is a great way to see when you are um, gravitating away from your story, and to ensure you are always revising and adjusting your story accordingly. So speaking of pitch, actually this is your last requirement for ES19 pitching. So it is more like you need to convince some people na it is worth investing ang inyohang product or business. Something like that. So in some cases, murag ako man ang mag-raise sa inyo ha, so I will be your investor. So soon, kung mag-pitch presentation, you need to convince me na it is worth investing ang inyohang product or business. So you take down in your mind na it's very important that you need to convince your investors, especially for future investors, especially kung in the future kung you will really want to start up your business, you need to convince your investors. Okay, so mao na ang pitch presentation. If you actually watch the first webinar atong nag-attend bog first webinar last time, the tips of doing pitching. So natong gi-showcase og isa ka video, kahit short amount of time lang to, at least gi-provide niya ang kanang murag the importance, the objectives, the mission, vision sa iyahang product or business na maka inganyo ang mga investors. So that would be all for the raising capital. So these are the references na gidiscuss nako here for the raising capital.